Good morning. Welcome back to the Daily Grind. I'm your host, Chump Changes, live recorded, and I'm a little bit under the weather, so we're gonna kind of bear with this today. So today, Ellipal releases their brand new 2.0 Titan wallet, which is pretty cool. So we're gonna go over some specs on that real quick. It is sponsored by them, so huge shout out to them. Well, not paid sponsor, but they sent over the unit for us to check out. So I wanted to make that fully transparent before we got into this, right? So we'll go over this a little bit. The pre-orders are opening today, so that's pretty cool. Then we're going to be talking about some UK financial regulators propose sweeping stablecoin rules over on CNBC television. And then Altcoin Daily kind of talks about the big problem with Dave Ramsey. I guess he's saying to sell your Bitcoin now. I don't know what's going on with that, but we're going to get into it in just a second. Let's see who's here, and then we will go from there. Sorry, bear with me. My stuff is all over the place today. All right, Mr. Steven Cicero, Leo Lustig, good to see you. I need my COD. What's up, buddy? Kyle Rosa, Duke Nukem, Carl Coate. Let's see, Andrew Masad, Nick K, Mike the Miner. Good to see you, buddy. Haven't seen you in a bit. Let's see, The Pirate, Tim, I Am Crypto, Carl Coate. Good to see you. All right, anybody else I may have missed, I apologize. But first, as always, let's get into this. See what we're looking like for Bitcoin. Bitcoin 34,789. We have Ethereum 1878. Not too bad. Ooh, look at this. Let me blow up the screen a bit. We have Dogecoin 7 cents, a little over 7 cents actually. Sorry if the music was a bit loud. Actually, I just turned that down. All right, let's see. Ton is 2.44. Crow actually is having a big jump today. 7 cents, 7.7, pretty much close to where Doge is at. Doge is at 7.3, like I said. Caspa is still holding at over 6.5 cents. Holy shit, man, Caspa is doing great. I'm super excited to see where that goes. All right, let's see. Top 100 coins over on Crypto Bubbles. Remix is down 18.7. I don't know if anyone's buying into this shit, but I don't know. This coin, I don't know anything about it. I'm not a huge fan of it, to be honest. CRO again, Kronos, the crypto.com token. Why does that logo look weird? That's strange. This is the same one, right? This is the same token, if I'm not mistaken. Please tell me I'm not wrong on that. Let me see what you guys are saying in the chat. Crow had a big week. Yeah, it was pumping up last week, if I'm not mistaken, or Sunday actually. I was listening to Mr. Rabbit Mining while I was driving. Yeah, we have Caspa up 2.8% today. Teo, whatever this is, Bitsore, I have no idea what this is. No idea. 6.2%. Rollbit down 8.6%. We have Ton again 5.8% up. Not too bad. Not too bad. All right, Karen Great Index. Try not to blind you guys. 68. It's getting there. Pretty neutral. Top 10 coins by coin market cap. We have Bitcoin, Ethereum, Tether, BNB, XRP, USDC, Solana, Lotto Stake, Ether, Cardano, Dogecoin. Why I just got so thrown off. Did I miss something? Did I read all 10? I think the Solana and Ether just kind of they flipped. They must have flipped because that just screwed me up talking about it. Let's go check out where is it? Litecoin still in 18th. We have Shiba in 19th and Bitcoin Cash in 20th. And again, I apologize. I'm like all over the place today. All right, real quick, let's check out the Ellipal. So if you guys don't know what the Ellipal is, it is a completely air-gapped cold wallet, which is obviously you guys want to have your stuff off an exchange, right? In this I actually have been thinking about taking this wallet and the other one. I have both actually, the Ellipal and the Titan 2.0, which is this one, and I have the Ellipal Titan, just the original one. Let me see. So this is the original one, right? I've never put stuff on this, but I did do a review on this, and then I have the 2.0 now, which is the one that they have here. So I guess let's just see. Wow, my camera just got wicked fuzzy. Sorry. Let's just see what they got. So what's new and improved? Let's see. They have enhanced functionality, sophisticated design, nothing too crazy. Advanced secure element combined with air-gapped architecture. We have heightened sensitivity, accelerated processing speeds, optimized power efficiency, which is awesome because the battery, obviously you want a good battery life. Luxurious skin, smooth texture. I don't think that really matters to too many people, but it is a it's like a hardened aluminum shell, which is pretty cool. So I kind of want to see what's all about that. You know what, Mr. Max Voltage and I believe Mr. Hawk Crypto Mining, if you guys are interested in seeing an actual full review of this unit, both of them actually are going to be putting out a video today, if I'm not mistaken. What I did want to show you guys though is if I scroll down, so this is like the little packet they gave us to like kind of look over the units. Just in general, like comparing it to like the, you know, the Ledger and the Trezor, Let's see. It says secure element chip, certified secure element CEAL 5+. I don't know what that is. Trezor has none, but these ones have the exact same ones as the Ledger, which is good. No touchscreen. These are both touchscreen units, the 2.0 and the mini, as well as the old one. I don't know if they're going to be selling the old Ellipal Titan anymore. The size of the screen, there's a 4-inch screen on this unit, which is giant. It's like the size of your phone, basically. The Ellipal Titan Mini is actually 2.5 inch, 2.4. Screen is color, not black and white like the other ones, and the casing is metal. They have anti-disassembly, which is very good, and anti-tamper, which is also very good. The Ellipal coins and tokens, you can actually hold over 10,000 coins and tokens, 200 DApps, and it is completely update status is completely offline. Everything else is online. So I'm going to be honest, I've been debating whether to just send everything from my Ledger over to Ellipal, because I like the fact that the update status is offline. This was the biggest deal for me reading this. But yeah, pretty much that's pretty much all I really wanted to point out to you guys. I do want to make sure you guys you know, get over and check out the full reviews that these guys are going to have. Unfortunately, I didn't have a chance to get into it yet, but again, I do have it in the pinned comment. It is not a referral code. It's just whatever the website, I clicked on it and it went to it. It says ref, but I don't think it is anything. I think you put in Titan 20 to get 20% off or $20 off or something if you guys go to pre-order it. All right, let's check out Mine the ASIC as we always do. Again, time capsuling these units. I want to see what is the most profitable over here, and yeah, we'll just we'll see what's new. K9, nothing really new. 160 a day. Obviously, with the price of Caspa spiking, that's pretty good. We have the KS3 is 144 a day. The KS3 from Ice River, the first one is from Bitmain. That was the 9.4 terahash. The Ice River one is 8 terahash, $122 a day. We have the KS2 making $29.74 a day. Shout out to DJ Mines. He just got one of these. If you guys want to go see that, go check out his channel. We have the KS1, $14.87 a day. Let's keep scrolling down. Let's see the Jazzminer X16Q. Shout out to jinglemining.com. $5.70 a day. ETH, W, and ZIL. Let's check out the KS0 Pro. Man, I still gotta tell them this is doubled. I keep forgetting. I should just add them on Twitter. $3 a day basically on the KS0 Pro, and it should be $1.50 for the regular KS0. Yes, $1.47. So not too bad. All right, guys, let's get into this. I'm tired. My throat hurts. Yeah, we're getting over this little cold or whatever the hell I got. So UK financial regulators propose sweeping stablecoin rules. Let's see what crypto CNBC has to say, or Crypto World on CNBC has to say. Hit that like button, guys. Appreciate you for watching. Let's do it.
Today, UK regulators published their ideas for regulating British pound-backed stablecoins. The SEC pushes forward in its civil suit of Terraform Labs co-founder Do Kwon, and crypto experts weigh in on institutional backing of stablecoins, blockchain tech, and digital assets as a whole.
Sorry, Mr. I was just reading the chat. I didn't have the chat open, but this is the code. It's Titan 20 to get $20 off. Let me see. I don't even know how much it is. Let me check. Product. Yeah, I understand. Okay, whatever. Pre-order now. Let's see. $169, $170 for this new wallet. So, I mean, the biggest thing is the supporting over 10,000 coins and the updates. Well, it has auto self-destruct if anyone tampers with it, but the updates are completely offline, which is a very big deal for me anyways. All right, let's continue. Sorry, guys.
Welcome to CNBC's Crypto World. I'm Jordan Smith. Major cryptocurrencies are starting off the week pretty much flat. Bitcoin had been trading above $35,000 this morning, but by noon Eastern, fell back below to the $34,000 level. Ether traded up about 0.5%, while XRP was among the biggest winners today, climbing 9% since yesterday. Okay, let's talk about the top stories. We've been focused on the trial of Sam Bankman-Fried over the past few weeks, but US regulators are also moving ahead with other crypto-focused court battles. Last week, the SEC asked a federal judge for a summary judgment in its civil case against Terraform Labs and the firm's co-founder Do Kwon. That lawsuit alleges that the company and Do Kwon raised billions of dollars by selling unregistered securities and defrauding investors. And in this latest filing, the agency says that the evidence of violations surrounding the collapse of Terra Luna is clear, undisputed, and overwhelming. Now, for their part, Terraform Labs and Do Kwon have argued in previous filings that they did not issue unregistered securities and that the case should be dismissed. Do Kwon also faces separate criminal fraud charges for which prosecutors are trying to extradite him from Montenegro. Next, the Bank of England and the Financial Conduct Authority are teaming up to craft stablecoin regulation for the UK. Both financial watchdogs just released proposals which lay out guidelines for the industry. The BOE proposes that there should be clearly identifiable payment system operators who assess risks across transactions. It also wants issuers to fully back stablecoins with deposits at the Bank of England. On top of that, there are proposed requirements for issuers to process payments in real time or by end of day. Meanwhile, the FCA wants to require issuers to be authorized to circulate stablecoins backed by the British pound, and like the BOE, pushes for ease of redemption. Now, both UK regulators are seeking comment on these proposals up until February of 2024. All right, sticking with stablecoins for our main story. Last week, Crypto World's Tanay Makil sat down with 3 experts in crypto: Raj Damodaran of MasterCard, Stuti Pandey of Kraken Ventures, and David Wells of Enclave Markets to discuss the state of institutional interest in stablecoins, blockchain technology, and more.
Stablecoins.
All right, thank you all so much.
I feel like stablecoins are never ending. Do you guys still feel like it's they're kind of inevitable? I just knocked something off my desk. I don't even know what it was. But I think stablecoins are inevitable. They're trying to push them pretty hard over in the UK. It's a 20-minute video. Jeez, I didn't realize it was this long. Let's check it out.
Much for joining me today, Stuti. Welcome back. I do want to talk about the recent movement in stablecoins to start. We obviously saw this big rally in Bitcoin last week, touching 35K, kind of sitting comfortably just below that right now. And as we saw that, we actually saw an increasing number of transactions and on-chain transfer volume in stablecoins just in the last few days, despite the fact that the market cap of stablecoins has been shrinking this year. And, you know, the whole market has just kind of been stuck since about May. So I want to turn to David for your history and expertise in stablecoins, but why might that be? And we're going to dig in a little bit more into the various use cases and innovations in this sector of crypto. But why now are we seeing this spike in stablecoin activity?
Yeah, I think that's probably related to a market structure dynamic that happens in crypto markets. So when markets are more volatile, you'll see people positioning capital essentially as buying power to be able to, you know, buy or sell or trade, particularly across venues. So you have a lot of trading firms that will trade on multiple different venues, and they'll look for sort of arbitrage opportunities. And so that means you need to have stable coins as sort of buying power to be able to do that.
That's a good point. So like arbitrage, you guys don't know what that is. It's like you buy on one site for a lower price and you sell it for a higher price somewhere else, like on another site. You know, there might be a little gap in the time frame there where you can actually benefit from it. But I mean, stablecoins, I honestly see like each individual, I guess, country, right, probably making their own type of stablecoin. So it's just, I don't know, it'll be easier. I mean, we're going to a complete digital world, and I don't think that we're not going to see individual stablecoins per country. That's just how it's going to be, I think, eventually.
So, and despite the landscape that I just laid out, it's been, you know, a shrinking stablecoin market cap has been shrinking all year. Nevertheless, it was kind of a hot topic throughout much of 2023. And Stuti, bring us back to that for a second, because you talked about that a little bit the last time we did this together. Bring us back there for a second. Why are stablecoins such a hot topic, even in what has been a muted crypto market?
Sure. So what the bear market has provided is a bit of a peaceful backdrop for building products that provide sustainable value and reasonable innovation to the crypto space. We're no longer sort of, you know, taken up by the energy of the bull market and only these like number go up protocols. So, you know, one of the things that has been emblematic of this year is rising treasury bill rates, right? And treasury bills offer two very compelling utilities to crypto. One is stability, and then the second is yield. So there is both a new crop of stablecoins as well as an existing crop of stablecoins that are looking to take advantage of these properties. On the stability side, you know, if you are collateralizing your stablecoin with treasury bills, you're essentially offering another way to maintain peg stability to the US dollar. And on the yield side, now that rates have been in the range of 5%, you now actually even have an interesting revenue source for your protocol if you are using stablecoins to collateralize, or sorry, if you're using treasury bills to collateralize your stablecoin. You have incumbents such as USDT that are choosing to absorb this revenue for themselves. And then you have an emerging class of startups such as Mountain Protocol or Ondo or even DAI and Frax that are finding ways to share this yield with their users, mostly non-US users, and find a way to differentiate in this market, thanks to this, you could say, like rally in treasury bill rates.
So what happens, and I want to stick with you for this because the rising rate environment has been such a big story we're covering at CNBC, of course. What happens when those yields start to drop in terms of all of the stablecoin innovations that you just named off?
All right, so when yields start to drop, crypto is probably back. So lower yield environments are when investors tend to go into risk assets, which crypto counts as. So overall, like net, it's probably going to be like a great thing for crypto when that starts to happen. So you'll have your incumbent stablecoins, let's say like Frax and DAI and USDC, USDT, which will probably keep allocating to T-bills regardless of the drop in revenue, specifically from that source. Because overall, their market share is probably rising since they're often the base pairs for other trades being made in crypto. Then you have the surgence of startups that are specifically built on this current rates environment. So these are the emerging protocols, stablecoin protocols I mentioned. And then you have what I call real world asset tokenizers that are looking to bring a number of different types of assets on chain, maybe even private credit or real estate, but they're starting with treasury bills because of the current rate environment. I think this latter class definitely will have to do some thinking if yields start to drop. Maybe they'll think about replacing the underlying collateral with other yielding products. But I really think their opportunity is right now, their window of opportunity to take advantage of high rates and start to build up network effects to challenge these incumbents, which honestly have Lindy on their side.
Raj, turning to you, so to what extent does this rate environment affect not just what you at MasterCard, but also your peers in Visa and PayPal? I mean, you guys are working on completely different things from what Stuti was just talking about. So is the high rate environment something that you think about as well?
Yeah, not so much, but I think it is important to think about these stable coins in the context of what use cases that are getting utilized, right? So both David and Shruti talked about different use cases, trading related use cases where stable coins are highly appropriate to use for trade and settlement. But there's also a number of other use cases that's starting to get utilized. For example, a remittance is a great place where it could potentially serve. But stable coins fall into this category of wherever you have a transaction that is limited in scope, can get settled quickly, it gets utilized really, really well. But there are other use cases where you need either a real world asset settlement or a real estate settlement or lending involved, where banks play a much bigger role. And there, another form of currency may be quite interesting as well. So we're starting to look at tokenized forms of deposits, which is really wrapping what's available in bank money, which turns out, I think stable coin, depending on which ones you count, which ones you don't, there's about 100 billion or so in stable coins. But the bank money is, I think as of last time I checked, $17 trillion in US alone, right? They can lend, they can actually be part of much more number of use cases related to real estate, related to lending and so forth. But it doesn't get the benefit of programmable money today, and which we think once you make it possible to do so, it'll open up a lot more use cases. So not to say one category of currency is good for and another one is bad. I think it is really picking the right form of digital currency format for the kind of the use cases that we work on. I think we're just getting started on this new category. It is related to stable coins because it is deposits, and it is also decentralized because there are thousands of financial institutions that actually take deposits and lend. And
we spoke just a couple months ago, I think, because you guys had launched the multi-token network. I believe it was over the summer. Remind our viewers exactly what that is and what your goals are, but I'd also like to hear a little bit about what you've learned from that in the last couple of months.
Yeah, it's a great, that example, multi-token network is really a network for making tokenized bank deposits available as programmable money and for different people to build use cases. And we opened up a network test version of the network in UK first, and we saw a lot of real world asset tokenizers such as real estate providers, carbon credits, even people who are shipping from one location to another where they are actually tracking the shipment and delivering payments on delivery. So a range of use cases, all are traditional use cases that would be served by the banking community, looking to innovate and bring new business models because the money is programmable now. I'll give you one real example. Trade finance was one of the categories where people tokenized invoices, and often people raise money against account receivable. There are complex flows involved in collecting the money and then distributing the money when it's due. All of that is possible, much more possible, when you have the fundamental building block, the money, as well as the associated asset, both in the programmable form. We also saw use cases where real estate, where you can do escrow payments, which is basically payment on delivery, and that requires coordination as well. You don't want to lock up the liquidity until everyone is ready. That moves money out of the system, and you really not have available for other purposes. But at the same time, you want assurance that the transaction can complete in the end. So all of this opens up new forms of business models that companies are launching on this network, which is what we are seeing.
Okay, so
Yeah, I mean, the whole stablecoin thing, like, it's, you know, we have obviously stablecoins already, right, that are just, you know, kind of pegged to the US dollar, but like what they want to do is, or what I'm getting out of this is, they want to create their own stablecoins to basically just control shit. Like, that's pretty much what they're getting at. Am I wrong? Am I wrong about like all that? That's really all I'm hearing. They just want to kind of control everything. And escrow is like the biggest goddamn scam on the planet. If anybody has their taxes and all that shit in escrow, like when they go and sell your mortgage and they can just decide to charge you like extra money because they want to hold 3 months instead of 2 months, like your last company or whatever. God, it's such bullshit.
So how far away, so we've talked about a lot of different use cases here. How far away are we from this being in the mainstream? And you know, specifically, we've seen a number of headlines crop up in recent days about this idea that tokenization is dead. Let's stick with the tokenization of real world assets, because that, you know, it's not a new topic, but it is something that has reemerged as a hot topic, I believe, because we've been kind of stuck in terms of liquidity and volume in as far as crypto trading goes. So, you know, we've got companies like MasterCard doing all of these new things. But, you know, after this rally, do you see the rally in crypto trading going higher? Do you see a pullback in the popularity of tokenization of real world assets as a result? David?
Yeah, I mean, I think that there's a short-term cycle and a longer-term cycle. I think real-world assets, you know, it's had many different labels and titles. Back in 2017, it was security token offerings. That was kind of the first concept of it, and people were talking about tokenizing art and real estate. And so we've seen these sort of like mini cycles of interest, boom and bust. But I think, and it's a long process, right? The evolution of real-world assets and tokenization in general starts with stablecoins. I think that's the fundamental building block. Now we have a framework for connecting traditional assets to a layer one or to a public blockchain. Next is going to be foreign exchange, where we have right now 99% of stablecoins are USD based, sort of the reserve currency of crypto trading. So we'll see FX markets start to move in that fashion under the same framework. At the same time, we have started to see regulators, like very well-respected regulators in developed economies, start to actually work together on a real regulatory framework to allow this, and start to have pilot programs and sandboxes working with some of the largest financial institutions in the world and asset managers. And so through that framework, it's going to take time to build that out, of course, because we're connecting a system that's been around for 100 plus years with a technology that's been around for 10 to 15 years. So it will take time, but I think eventually underneath these frameworks and with the interoperability from a technology perspective that's offered by using a common communication language, a common protocol, and also common regulatory standards across different types of markets, now you'll be able to have assets that are tokenized and are fungible across different jurisdictions and geographies, and that's where the real value. So I think at some point we'll see an inflection point of these things like starting to take off. And I know you're probably smiling because people have been saying this for a long time.
Well, yeah. At what point? At what point do we see it?
I think there are two things that need to come together for this to really take off, right? There is a money side and there is an asset side. You need scalable money on one side. There are different forms of money, like we talked about, for different purposes. We need that. And we need different types of assets available as well. And who is the provider of the tokenized asset? And who provides the trust that it's indeed, that tokenized form of the asset is indeed what the asset it represents behind the scenes. It's the real estate, or it is the carbon credit, or it is the invoice that we're talking about. We need those mainstream providers. They're not crypto companies. They are B2B companies that are there today that offer these assets using a non-crypto, non-blockchain technology. They need to come on board as well. And that's what we started seeing when we ran this innovation sprint in UK. We started seeing financial institutions coming in, providing scalable money, and asset providers coming in, providing that last mile of trust that you need, so that when you have the tokenized asset on chain, you know that truly it represents the asset, right? So I think that is, there are a few other things like identity and trust and compliance and making sure that the environment is safe and sound. But the core building blocks are scalable money and scalable asset provider list.
And going back to your note about regulation, are you guys feeling optimistic about the regulatory path here in the U.S.? Start with you, Raj.
Look, on the stablecoin side, I think there has been as much clarity as you've seen. The state side is providing. The New York State is leading the regulatory framework on that. There is a number of bills that are proposed right now on the overall federal level. We'll see what happens. You've seen even today, UK proposed a stablecoin regulation this morning. MiCA in Europe has already a law of the land. I think we welcome this increased regulatory clarity. I think what it'll provide is it'll clarify what assets that need to back and how you can consider a stable coin to be compliant. But beyond that, I think the financial institutions also starting to enter in the space. You may have seen a number of announcements, and they're using existing money that is already regulated that they're trying to apply this technology to. So you'd see overall it is moving in the right direction. Obviously, there are multiple jurisdictions, varied laws. It'll take time, right?
And going back to the idea of market structure, a lot of times most of the time when I think about stablecoins, I think about them being this sort of bridge currency for crypto traders to move in and out of assets without having to leave crypto. And we have seen this trend of U.S. exchanges moving away from regular U.S. direct withdrawals. Do you see stablecoins playing a bigger role in this ecosystem? As there's a reckoning between banking and crypto, Stuti?
Sure. So traditionally stablecoins are seen as base pairs for trading, et cetera, right? But one very interesting use case that is on the rise is stablecoins being used in emerging economies. And in this use case, you can see stablecoins as not just as digital dollars, but as dollar diplomacy. So in the US, we can take the stability of the US dollar kind of for granted. But let's say you go to Turkey or Latin America, that is just no longer the case. And in jurisdictions like those, stablecoins are giving average citizens access to a better alternative, right? That is often pegged to the US dollar. So, I saw one interesting statistic that in Turkey, Tether, which is a leading stablecoin, has 20% of volume on BTC Turk, which is one of the leading digital asset currency exchanges in Turkey. And that is opposed to 1% of the volume on Binance. So this is a signal of strong Turkish demand for stablecoins, given that lira, their inherent currency, is unstable these days. So what I'm seeing is that stablecoins are actually creating rails to easily export US dollars and, in my eyes, also export human welfare to these geographies.
Also, Raj mentioned payments, international payments and remittances. I think the entrance of more traditional fintech companies like a PayPal launching their PayPal USD, it shows the long-term view of this being a much larger use case than just sort of in the crypto trading markets. I think you'll see more entrants into the space like that are neobanks or fintech forward companies, and they see the real opportunity beyond just sort of like trading.
All right, that's all for Crypto World today.
Well, shout out to Crypto World for that. Yeah, I feel like everybody's going to be making their own stable coins, right? Quote unquote stable coins to just control shit. That's all they want. That's really all they want at the end of the day. All right, we're gonna watch this right
Dave
here.
Ramsey.
Oh, sorry, didn't want to start it yet. But the big problem with Dave Ramsey, this guy has a pretty well-known podcast, if I'm not mistaken. And hit that like button on his video. But yeah, let's hear what he's got to say. I don't have too much more time. Again, I feel like crap. I got the hobby pox, as Mr. Geek of All Trades says in the chat. But all right, let's get into this and let's see what's going on.
What is Bitcoin? Bitcoin is a currency on the internet. It has no value because all of a sudden, one of these computer nerds just flips a switch. The whole freaking thing's gone.
Dave Ramsey, host of The Ramsey Show, just made the biggest financial mistake of his life. And this is shocking because he usually does offer such great financial perspective.
I've heard a few things on this guy's podcast, like shorts and stuff. I've never actually seen his full show, but he seems pretty legit. Does anybody watch him? Let me know.
$4,000 SUV when you make $85,000 a year is stupid. Borrowing money on your house to put granite countertops in. Somebody ought to smack you. The borrower is slave to the lender. Voluntarily.
That was actually a very that was a wrong statement by him, because your kitchen is the most value in your house. That is the smartest renovation you can actually do, being in the trades. Personally, that is the smartest renovation you can do.
Signing up to give our lives away.
And while Dave is one of the most respected financial educators of our time, in fact, he boasts an audience of over 18 million weekly listeners. This is due in large part to his folksy attitude, as well as a Q&A format where listeners call in, ask their financial questions. Dave responds.
My husband spends over $1,000 a month just on phone games.
On phone games? On phone games, $1,000 a month? What?
$1,000 in total debt.
My house is in the process of being foreclosed on.
It's no wonder that the Howard Stern of finance has amassed such a loyal financial audience.
All success is a pile of all the mistakes you've made, and you're standing on it rather than laying under it.
But the biggest mistake Dave Ramsey ever made, it cost him millions. It cost you hundreds of millions if you would have listened. Started over 9 years ago. Dave Ramsey calls Bitcoiners stupid and says Bitcoin is a really good way of turning 1 million into nothing.
But it's a really good way to turn $1 million into nothing.
Now, at the time, Bitcoin's price was around $550. Don't you wish you would have bought? Or at least found a video, somebody taking the time to actually educate you why Bitcoin is valuable, linked down below.
Well, this show's about breaking free.
Dave Ramsey says that he wants his audience to break free, have financial freedom.
Well, this show's about breaking free. This show's about no more chains. This show is about you taking back control of your destiny. This show is about believing and showing you exactly how, step by step, process by process, you can get your most powerful wealth building tool back. It's called your income. And if you don't go get it back, it's going to be your fault, because I'm going to show you how.
So understanding all that financial freedom is the goal, let's now travel back over 9 years ago today. If you would have put any amount of money into Bitcoin at the time of this show, you now would have over 63x'd your money.
And what is Bitcoin? Bitcoin is a currency on the internet. It has no value except to the extent someone else will take it from you as value. Just like that paper has no value except the extent someone else will take it. So Bitcoin is the Iraqi dinar of the internet. And I know intelligent people who, while they're intelligent, are not wise, that have put a bunch of money in Bitcoin. But it's a really good way to turn $1 million into nothing. To play in unstable currencies that they're, and here's what you have. Let me tell you what Bitcoin is. It's WWW. It's the Wild Wild West. You're back to the Western banking system.
WWW, Wild Wild West. That's kind of funny, actually.
Because all of a sudden, one of these computer nerds just flips a switch. The whole freaking thing's gone. It has no value. They just got completely ripped off, and it took them down. And so the little hipster techie guys are sitting in front of the building with a sign that says, "Where's my money?" Well, honey, you never had any. It's not real money because it's not a stable currency that has any kind of a system that backs it, that has any kind of a system that protects. Well, I've made a lot of money in Bitcoin. You can make a lot of money trading dirt to somebody else trading dirt until people catch on that dirt's not a good idea to trade. You can trade gravel out of your driveway as long as you can get away with it.
You know, real quick, funny thing about dirt is over in Tennessee. So I went to being a plumber, right? I went to the American Standard factory with a group of other tradesmen, right? And they actually specifically want the dirt from Tennessee to make porcelain toilets because it's like the best minerals that they could find, which is kind of, it's funny, but there is a difference in dirt. So I could have this argument with that guy all day about that.
And so just because you made some money doing it doesn't mean that it was a bright idea. And so I'll go ahead and, I got all you Iraqi dinar people and all you gold people all pissed off at me. So let's just go ahead and add you Bitcoin people to the mix. You're stupid. You're going to lose your money. Be pissed at me. You shouldn't have put money in something wacko like.
Since this episode, price has only increased, the network, the fundamental metrics have only grown stronger, and even some of Bitcoin's biggest haters back in the day, because it is okay to update your opinion, change your mind. Billionaire Michael Saylor once said, Bitcoin's days are numbered. It seems like just a matter of time before it suffers the same fate as online gambling. First, they laugh at you, then they fight you, then they join you.
If it's not going to zero, it's going to 1 million. It's either nothing, right? If it's nothing, then it's getting scrubbed out and banned. And of course, we now know that it's not getting banned, right? There's no way that Fidelity, Citadel, BlackRock, Charles Schwab, Deutsche Bank, Credit Agricole, Banco Santander all decide they're interested in this, right? They're not endorsing a tulip bulb. Then the question is, okay, well, it's an asset class. If it's not going away, then what's it worth? Well, it's worth 1% of the assets in the world. So 1% drives it up by a factor of 10 to 20.
Even Mark Cuban once called it a bubble. Now he's crypto's biggest fan.
I'm always into tech. I'm always looking for new opportunities, and I always look for new ways to do business. I'm an entrepreneur. And so, when you dig in on crypto, what really got me grooving on it was in 2020 when I started just trying to get updated on NFTs and started to really dig in and, more importantly, understand what smart contracts are about. Because the beauty of NFTs wasn't the NFT itself, it was the fact that it was an application using smart contracts. And what else could smart contracts be used for?
We have interviewed experts like this over the years. Dave Ramsey, I'd love to have you on. Because Dave Ramsey, just judging by his own videos over the last 9 years, refuses to update his opinion.
And then it's time to do
He's a dinosaur. That's what they do, right? They just get stuck in their ways and they don't want to change.
Real investing. Crypto is gambling. The last year and a half have been really unkind to crypto.
Yes, I remember watching it during COVID, right after we invested, and I remember watching it go.
Kind of looks like Walter White, like that, doesn't he?
Really low, and then going back up high, and now we're just sitting there.
But I mean, you've noticed the news that one of the largest scams in history was perpetrated in crypto.
Yes, sir.
Makes Bernie Madoff look like small potatoes. Okay, so the scams are all everywhere around it. It's an unstable place to put money. Agreed?
Yes, sir.
Okay,
for sure.
All right.
But
so
I
don't put money in places that are unstable because I'm telling people not to put money in stupid butt crypto.
Come on, Dave.
So, but and now I'm a genius, But I also told them not to invest their money in Beanie Babies a few years ago, and people were believing in that too. So
it's almost like you've lived to see a few things.
People made a shit ton of money with Beanie Babies, did they not? Am I wrong? That's no different than like freaking shoes, like Air Jordans or Nikes or whatever people are into. Like
it's almost
over the
like,
years.
It's almost
money
like
everywhere.
That's how I lost my hair.
And again, no specific hate on Dave Ramsey in general. I think he gives such sound advice. He's a beacon for education in general, and he has been for decades. But Dave, when you're wrong, you're wrong, and I think it's time we admit that.
Never invest because Dave Ramsey said to. Never invest because anybody said to except you.
I will keep you updated if/when. Hopefully, we can get Dave on the channel. He can talk about it. This channel, rain or shine, will continue to update you. We drop a video every single day, keeping you informed.
You give your income to someone else. You don't have it anymore. Huh?
See you tomorrow.
Dude's pissed. Well, shout out to Altcoin Daily for that, and you guys for hanging out with me today. Oops, I didn't mean to blow that up. All right, guys, I'm out of here. That's gonna do it. I feel like crap. I'm going back to bed. You guys have a good day. Appreciate you all. I'll catch you guys tomorrow morning, bright and early, 8:15 or so Eastern Standard Time. And until then, peace out.